GME stock, GameStop earnings are in. Let's take a look at earnings. Let's talk about retail. Uh, the inflation scenario versus deflation, the retail is going to be important here. And let's do the technicals, like relating this to the general market. So please like, share, comment, subscribe, and let's take a look at these earnings. It's a miss, and it's a big miss. I mean, I guess that's a big miss. You know, a high short interest stock missing earnings isn't that crazy. GameStop misses earnings a lot. And I mean, if you go back, you can see that the earnings don't affect the general direction of the stock very much at all, but you can get a big volatile move. Like, you can get a big sort of incorrect volatile move from an earnings miss or from a gain. Like, sometimes you'll just get a peak. It was more volatile back here, but volatility is a little bit higher again. The short interest is a little bit higher. So we may get a volatile one-day move off of this. Let's go into the hours. And yeah, there's aftermarket. Okay, so far we're getting we just got like a big nothing swing back and forth on this so far. So after hours are not super reliable in general. They're definitely not reliable on GameStop. So we're gonna have to see the trading that we get tomorrow. But the idea that I had is we have this huge uphill W coil here, which is super bullish, and it's about the size of, I don't know, a couple month bull run that you can get that's pretty volatile. And the generic idea with this is you start a uphill move and then you pull back to the top of the coil, which on GameStop is around 100, maybe 10, wherever, 102, 103 something, is around where the top of the coil is on GameStop. But GameStop, it gets the general money flows of the market, so we'll look at that. We'll look at the general market and the money flows, but GameStop did a move that was earlier than the rest of the market. Like, the rest of the market moved up about 2 days ago, right? And GameStop moved early, a day or two early, and it made a bigger move than everything else did. But this is the same. This is the same money flow pattern as happening in the rest of the market. And I was looking for a pullback to here, but it looks like we're just going to get a pennant, and that's going to be it. And it should move up from here, just based on this technical pattern. I'm not saying it will move up from here or anything like that, because this is not financial advice, and this is one trading idea. But this is the trading idea that I have across pretty much the Russell 2000, the small caps, and the NASDAQ right now are looking like they're moving like this, and you get this uphill W, super bullish pattern across a bunch of these charts. And GameStop does not look like it wants to pull down here, but right, it's earnings. And we may get a big volatile day tomorrow where you get a false move. And if it's a false move to the downside, that could be a really good entry. And it could be an entry even to a short-term trade, because you can get like a down move and a whiplash, and then you can get a normal just continuation to the upside. So, like a weekly trade, or even like it's going to be Thursday. So, yeah, like a two-day options trade is super high risk. But for anyone day trading, the earnings kind of whiplash thing could be a pretty cool thing. If we go back out to the daily, you can see that GameStop gets the same general flows. I mean, what COVID was this bottom here, but GameStop had sort of already bottomed before COVID. It wasn't a huge crash, and then obviously GameStop had a epic run up during the part of the market that was running out for most things. And then the market blew off in Feb, and GameStop blew off early. And then it rallied, so the money flows are similar to the general market, but GameStop moved early here in the February area, and then it rallied high. Like, some stocks made a higher high, some stocks made a lower high. That's depending just how strong that stock is and how related it is to just getting generic money flow from retirement funds and things like that. So GameStop is in the Russell. which is not, it's not a sector that should get a bunch of flows from like retirement funds and stuff like that. But it is a sector that gets flows from hedge funds for sure. But in any case, it blew off early here, and then it held really strong, which is pretty interesting because everyone's saying it's a crazy, ridiculous meme stock and blah blah blah. But it just did the normal peaking area. It held strong, and then this November kind of downtrend started late, a little bit late. Most things started peaking out in October. It's a little late, but it's the same. This is the same two areas where everything peaked once and twice. And this, March peak is right on time, and this coil is right on time. So this is getting the normal money flows from the market. Like this trading pattern is not super weird, anything like that. And yeah, this uphill W we're getting on the small caps for sure, all across the small caps. Some of the Nasdaq is getting this pattern, and then let me just show on fuel cell. You can see a similar thing, the uphill W, right? And this is the generic kind of pattern that you look for, and this one's kind of steep. I like the fuel cell chart because it did a really hard, like really volatile coil on the uphill W. It did a steep angle, and it did a perfect technical break and pull back to the top of the coil. So like this fuel cell chart is technically exactly what you're supposed to see on a bullish reversal uphill W trend. So I called the bottom here on the general market, and I'm calling for a rally here, just based mostly on technicals. And let me go to the market, but it's a lot more than technicals, because the inflation story is wrong. It's just wrong, and everyone that thinks that prices are going out of whack because of inflation and they'll never come down, I think is going to get a surprise this year, because the majority of the price increase was not from inflation. It was from a supply and demand mess, and that mess has flipped upside down now. Okay, let's go into the hourlies. Let's look at Target. I'm gonna do the hourly on the S&P, so you can see the mega fund pattern on the market that has set up here. So, right, the blow off top in the market, December, blah blah blah, January 22. Where are we? I zoom in on the hours. I can't remember the dates of things. But you get the descending wedge, right? So we go over the top and we start heading down. And everyone's saying we're in a bear market. And that's fair to call it bear market because we made a lot of down moves. But I think that's a little bit premature to call it bear market right now. And we'll see very shortly if that call is correct. But what we've done, let me go out to the dailies and show the wider chart, so I can explain where we are in the topping process. If you had the big megaphone pattern, right, this is like running up to the top of the everything bubble. But we've painted this downtrend here, and that will matter in a couple of years. Like that downtrend is a real thing that's there. This megaphone pattern where you blow out the top, like this is exactly what happened in the Great Depression. This is a normal sort of bubble run-up pattern. And see, we blow out the top, and now we jumped on top of the megaphone, right? So this is an area where you go bullish, and a typical topping pattern, not like most bubbles blow off with this pattern, but it's a common pattern that looks like it's happening now. So I painted it a little bit early, but this is the pattern that happened in the Great Depression. This pattern happened when Tesla blew off the first time. This pattern happened when GameStop blew off in February, and the time scales are all different. The GameStop top was in 3 days. The Great Depression was in like 6 weeks or something, and this thing's playing out over like a year. So the time scales are different, but the shapes are the same. But in any case, you jump on, you start painting the downtrend, and then you start going low, high. low, high, and you start painting a megaphone. And the volatility starts increasing, but the direction is not decided, right? And I think we're going to get 4 of these. That's what we got in GameStop. That's what we got in the Great Depression. And so we just bottomed out here. So I made this bottoming call. Why is it not painting? What's going on? It won't paint. Delete. Give me my paintbrush. It won't paint. This is the bottom. What the hell's going on? Brush, paint. Oh, look, it was doing it the whole time. Alright, so that's how strong the bottom is. That's ridiculous. Alright, so I made this bottoming call and painted this megaphone on the general chart. Now I want to go in. Let's go ahead and look at the hourlies on this chart. And let me just show the what I was about to show, which is the interactions on all these lines that I just showed you. So we have the red line, which is the top of the COVID megaphone, the previous one. The yellow lines are current megaphone. We have the green lines, which is our channels that goes back to like 2018. That's our bull channel. But what we're getting now is less and less reactions on the bull channel. And now we're getting huge volatile swings between these, I just call them megaphone lines, I guess. But we came down on the descending wedge, right? And then we do yellow to yellow to yellow to yellow, right? A little false breakout stab, which is good. That means we want upside, but before you get upside, you go check the other side of it out. So we go down. And then on the way down, we get a little bit of moves around the green line, but nothing much. We run through it. Right, set up the down channel, and we pop off the red, right, break the red, and then we go green, red, yellow, green, yellow, green, yellow, green. We break the green, right? This is a pretty hot coil down here, right? And then we tap the red, break it, come back down on top of the red. And so the idea that I have with all this interaction is that the green line's not very important. It just gets reactions right now, passing reactions on the way through. But I doubt we step through the red just to test the green. It doesn't look like that'll happen. It's more likely we make a triple bottom and tag the yellow. That's more likely, just based on the volatility and the reactions that we've gotten now. But what I think we're doing now is I think we're topping. We've got this W bottom. And on the NASDAQ and the S&P, it's a downhill W. On most of the charts, it's a pretty tight uphill W kind of coil. And I think that we're going to just take off here. Like, that's my number one scenario. That's what I'm positioning for now. Like, back here on these two peaks, I was getting a bunch of leaps. Like, January this year, January next year, long-term call options. And I was getting them across a bunch of different sectors, materials, miners, some NASDAQ stocks, just to kind of see what moved. Since I have a couple of these stocks here. I didn't get Tesla because it didn't hit any points that I thought were interesting or easy to trade. But in any case, that's the technical picture, is that I think we've bottomed, and I think we're going to make a volatile move up. And I think it will only last like probably 2 months, right? We have this sort of topping area up here. I have a tag that's just sort of floating here. But yeah, somewhere in this whole area here over the next month or 2 months, I think we're going to get a topping pattern and a big reversal. And then I think we're going to make a low. So this is a little bit early call. Just right now, I'm just calling this breakout. And there was a bunch of different stocks I was looking at. I mean, I have material stocks like Alcoa, FCX, uranium, like Uranium Royalty Corp, as material stocks that look like they have good charts, and they still look like they're holding and doing well. So I think these are doing well, but I did not really expect meme stocks or the NASDAQ to be hot, and they are. They're getting a bunch of volatility, a bunch of movement. So I think we're going to get another run on GameStop, on Tesla, on the NASDAQ, on the IWM, right? And so let me explain, I guess, retail. Like, look at Target. Target did something ridiculous, and this is the supply and demand curve that I'm going to explain, and the inflation I'm going to explain, because it's important to GameStop because it's in the retail sector. But let's go to dailies. Target held up pretty well, and it did a teleport down move, and everyone's freaking out about this. And we had a bunch of earnings misses on retail stores this quarter, and it has everything to do with supply and demand. Because in the COVID crash, which is, where is that on Target? This thing, right? When we had COVID, we had a bunch of ports shut down. We had a huge supply shock. So demand is normal, right? And supply goes down, right? So that starts pushing prices up. Supply and demand starts pushing prices up, right? But then we had a money printing festival. So we had demand higher than supply and inflation at the same time. So we saw prices move a lot. And everyone starts freaking out about that, which is normal. But then what we had is supply comes up and demand comes up. They were both moving up together, and inflation for like a whole year. Supply and demand and inflation are all moving up together. But then what happened is supply started overshooting, and I can't really draw it on the stock chart, but it pretty much matches the same pattern that you see here. But supply started going up, right, and the shelves start getting overstocked, but demand starts crashing. And now instead of having way more demand that's pushing prices up, we have the exact opposite setup right now, where the supply is over the top and demand is falling, and now people are calling for a recession because demand is so low, and supply is so high that we're going to see prices flip upside down. But the thing that is tricky is the prices moved around a lot, and we don't know what came from inflation and what came from supply and demand. But what I can show you right now is the Eurodollar curve that tells you exactly what came from inflation. It's really simple because the international bond market is always right, and it knows where the curve is supposed to be. And the Fed doesn't really know stuff. They just literally just look at that chart and tell you where it is. But yeah, this is the situation that we have right now. We have oversupply, especially in like Target and Walmart and those type of stores, but this applies to GameStop as well. And now demand is down, right? So this is, people are going to say deflation, like Kathy Woods is going to say deflation. Kathy, supply and demand and inflation are completely separate things. Stop using the terms incorrectly. Inflation means more monetary units. It does not have anything to do with supply and demand. Like, it just annoys me when people use the term inflation like completely wrong. But we can go look at actual inflation, which has to do with the monetary supply and with interest rates. And the best chart in the world for looking at that is this chart. And it works best on weekly, but it's fine on the dailies because you can see everything right here. Okay, so we had the 2008 financial crisis where interest rates went near zero, and I circled it here, right? And then we didn't really have a good move. Yeah, until like 2016, the interest rates started coming up again, and they topped out here, right? 2018, and then 2019, 2020, we had this interest rates like raced back to zero, right? And so we had the COVID crash here. So the stock market does well in bulls when this chart's going sideways, and it does not like it when it goes vertical, right? So we went vertical and did this move in COVID, and that was bad for the market, right? And then we had, after COVID, we had a huge bull run while it was going sideways, and now we just had a really ugly bear market while it's going down. Okay, so this chart is very useful for looking at how inflation and money supply is affecting the stock market. And what the Fed is calling for, or what they were calling for like 2 weeks ago, is a whole nother set of rate hikes. Like, 2 or 3 more rate hikes. So they're saying it's supposed to go. I mean, if they're going to do 3 rate hikes, like they're calling for it to go like here or something, like a big breakout, right? And what they got the past few weeks is not that. You can see right here on the chart what happened. It hit resistance, it coiled, and now it's going sideways. So now the Fed's like, oh crap. Like, if you listen to what they just said the last few days, they're like, well, maybe we'll hold off on these the rate hikes. We're not going to raise interest rates. And the truth of the story is the Fed does not control the international bond market. All they do is guess where it's going to trade, and this guess that it's going to break out is wrong. It didn't do that. It did not break out. It held hard at resistance, and it's going sideways. So, I mean, we'll watch this chart. It could still break out, but it doesn't look like it's going to. It looks like it's going to go sideways for a while. And if it does that, you get a bull market. Like the stock market loves that. It loves it when it's going sideways. And then we might go back to zero, which is a deflationary move. And if we go back towards zero, everyone is going to be wrong because everyone's been screaming inflation for the last like year or 2 years. And I've been saying like, it's not that simple. Like we're getting some inflation, but not as much as people think, and that can reverse, and it looks like it is reversing. So, in any case, just looking at the Eurodollar future charts, the international bonds, it looks like we're freezing right here. Like it looks like inflation peaked, it's done. Interest rates increases peaked, they're done. And the Fed wasn't late, and they did a correct move, meaning they didn't have to do some emergency change in interest rates. They did normal stuff on schedule, like nothing was weird, but they don't control this market, and it looks like it's going sideways to me. I mean, you can listen to the Fed's best guess if you want. You can listen to my guess based on technicals if you want. Make up your own, idea of where this thing will trade. But wherever this trades is where interest rates are going. Like it's that simple. And a sideways thing is bullish, and a big move is creates volatility and crashes. And that's what I think. I think we're just going to do another cycle, another same ass cycle. Like, this goes up and down across this thing for the last 40 years. It's been doing this. And okay, the Fed said it's going to break out. They called a breakout and it didn't break out. So, whatever. Maybe they just missed the call, but they didn't miss like where it was. They were able to put the rates where they're supposed to be the whole time. So, anyway, that's the rates, and that's a lot of the inflation story is right there. But this matters a lot for GameStop, because if you're getting a supply and demand thing that's flipping upside down, I mean that's bad for earnings, right? That's good for consumer prices, bad for earnings. But if we get the inflation stops, that's going to be really good. It's going to be good for the stock market, especially just if the bond trading just chills out. It's good for the market. But in any case, that's where I think we are. And this is the same bottom on every chart. And like the movements that we've gotten off of that bottom are very different on every chart. But GameStop has made a big early move. Maybe it's pulling down. We have earnings coming in bad. So my idea was we might get an overextended down move from bad earnings that you can buy, and it might get crazy. Like that's the idea. That's the idea with GameStop. But it's not happening right now, because you can see the after-hour trading on GameStop is neutral or even a little bullish after the bad earnings, which I was thinking like we may come down, but we might do that. We might do that on normal trading hours tomorrow. But it seems to me, not investment advice, just my personal idea is tomorrow is probably going to be the day to enter a GameStop long trade. I think that we're going to explode to the upside, and I think tomorrow is the perfect entry on that trade. So anyway, that's the idea that I had, and I covered most of the stuff. Yeah, we're like in, I guess let's look at the Russell. The IWM is the, you know, the ETF that tracks the Russell 2000, which is small caps, and GameStop is in GameStop is in the Russell, and this is a technical uphill W on the entire Russell, and it did it perfect. Look, I didn't even look at this until now, but the Russell just did the uphill W pattern perfectly. That is a key bullish bottoming pattern. It didn't coil super hard. Some stocks coiled harder than this, but this is an entire index that just did this perfectly. And the NASDAQ did not do that perfectly. The NASDAQ made a lower low, right? And it did not coil too hard. It just kind of flipped. So it's doing a similar pattern, but it moved up hard. So it did a really hot lower coil and it moved up hard. And the thing that happened today that I was watching is the S&P made a decent size, and we're on hourly, so this is cool, but the S&P pulled down all the way back to this coil. See where we broke out of the red line? Like we pulled all the way back down and retested it, and now it's got to make a decision. It doesn't know. It doesn't know which way to go on this line, and I'm obviously calling bullish, but it could go. This can go either direction. It's a coin flip. But I'm calling bullish not from this. I'm calling bullish from this mess. Like this is a super bottoming pattern off a big time down. Like this is something that you jump off of. So I'm calling bullish on a longer time frame. But if you're day trading, good luck with that. That's scary looking. But anyway, the S&P pulled all the way back to this area. The NASDAQ did not pull back to this area. Right? So you have growth looking stronger than the market again, which is a risk on thing, and it's a bullish thing. And it looks like we're perfectly at support, and it looks like this wants to run from here. So that's why I'm saying the NASDAQ looks like it looks good again. It looks like money wants to flow back into the NAS. It looks like this down move is fake because the NASDAQ is stronger. Like the NASDAQ will lead down moves. If it's a bear market, NASDAQ should lead the down moves, not hold up strong, right? And IWM moves early and holds strong, right? So IWM did a bigger up than the S&P, and it's holding strong. So IWM and NAS look like they're leading an up move off this uphill W. Anyway, that's the general shape of the market right now. And I'm calling this bottom too early, and I'm calling a top that's way higher than everyone else. I don't know, but it's just a longer term pattern that I just see on the chart. So I may as well just paint it. It doesn't mean it's going to happen exactly like that. It's really hard to paint a pattern like that and just have the market do what you think it's going to do, just because it's sort of a normal technical pattern. But I mean, that's what you trade off of, is the money flows and the technicals, and maybe you trade off of fundamentals, but the market really has not operated off the fundamentals for a lot of years. So I think we'll come into a time period soon where fundamentals matter again, but right now I don't think it's that time. Yeah, so what does it want? Oh, it wants me to go to dailies. Yeah, okay, so yeah, anyway, the NASDAQ versus the S&P, right, just went really weak in that bear market. That's what I was saying. And now it looks like we were going to get a rally. You can see it on this chart. So this is NAS over the S&P, the ratio between the NASDAQ and the S&P. And so we're coming into support, and it looks like we're going to rally. And so all I was saying is like a couple month rally, which is just this area. Like I think we're just going to get a rally into resistance. It's basically just a bear flag on this chart. But you can get a huge run in the market during that bear flag. And then I think we'll probably continue our move down, and we'll probably look ugly. I don't know. We'll see what happens after that. But I'm just calling for a little up move on this ratio right now, as just based on the last week. It looks like that's what's happening. The dollar, yeah, the dollar is strong, and the dollar held like this support channel, but I don't think we're going to get more parabolic moves on the dollar. I think we're going to kind of flag, and so that looks bullish, right? And then gold and silver look okay. Like it looks like they may be holding, but they're not It doesn't look like they're taking over. Like that was one idea that I had, is that maybe gold and silver miners and stuff like that would start coming in, and the Nasdaq would start getting weak. But it definitely looks like the Nasdaq is stronger than any of these kind of mining trades. Still, and Bitcoin, another monetary asset, looks scary. So this is interesting. If we get a risk on move, like if Bitcoin, like I have an upside target, yeah, right in here. So I'm thinking of maybe like a triple top idea on Bitcoin, but I think Bitcoin is gonna get in trouble soon, but maybe not now. That I don't. This I have no call on Bitcoin right now, but yeah, just like this as like an upside target. I guess the easiest generic call would just be like maybe Bitcoin goes flags, like another kind of bear flag, um, but doesn't rally with the whole market, and then probably when the market moves down again, Bitcoin might might lead another crash down like it did this time. That's the general idea I have with Bitcoin. I'm not super bullish on that at the moment. Tesla is just following the general market, which you can see it did the same thing. Like it rallied to the same top, the November top that the whole market had. It started this kind of wedge downtrend, and then you're getting the same kind of megaphone shapes on Tesla. It's a little sloppier than the S&P, which everything is a little sloppier, but you can see when you're doing the megaphone pattern, the moves get twice as wide and twice as tall, basically, like every time. So there's like a little bit of timing that you can get out of this. Like this is March, April, May, right? So this is like a one move month up, one move month down. So the next move up maybe should be 2 months, right? So like in July or something, and then like a 2 month move down or something. You can get some timing just looking at the size of the when you're doing a megaphone pattern like this, and also the up move is faster than the down move, so we might get an up move like right fast, like a 1 month up move and then a 3 month down move or something like that. So if you get a quick, and you can see this one is just like straight green, it just ripped, right? And so far this one started ripping and did this little pullback, which I painted in this video, but like this might rip like just like that, like the same thing as this one here, the same kind of rip that that one did, and then coil, and then just kind of work its way down, and blah 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 blah, and that's probably, oh, that timing might work. That looks like it fits the kind of sizes. I mean, just on Tesla, this looks like an obvious target, but it'll be the same timing as the general market. So in any case, that's the pattern that I see on the chart, and it fits Tesla as well. So Tesla's an interesting one. I should probably just do a Tesla video, and just do that pattern for real. Yeah, yeah. So that's what I'm looking at. Like Tesla, GME, Workhorse, Fuel Cell look like they have good charts. They look like they're in the sectors that are getting money flows. Like I think those are the trades for the next month or so. Um, there's a couple other random things like TCAT. Oh yeah, look, it's popping. Okay, so yeah, TCAT did did a really good technical pattern. It's not in any kind of index, it's art, but it just picked up support and broke out of the downtrend, and it just did the uphill kind of coil move when everything was doing the W, which looks good, and it looks like it's starting to get some volatility coming into the upside. So that chart looks good. Completely different sector. That one might be fun. Senseonics did a big pop coil thing too, and it looks like it's at support. That one could be pretty interesting. And this is healthcare. It's like a diabetes stock. So that's a couple of different ones that look interesting to me. Sava did an ugly bearish rejection on this downtrend. This is kind of a meme stock that I've been following. Like this rejection isn't for certain, but it looked fucking scary today. It looked terrible. But if we get on top of both of these trend lines, this one could be pretty cool. Upstart is a fintech company that has been just super volatile. Like it has just a ton of momentum, but it's not really following the money flows. Like the February thing had nothing to do with the stock. The October, November blow off like this one definitely was blowing off at that time, but like the March rally is nothing. So the general market money flows aren't really showing up here, but this one I don't know. It looks awful, but like this is a really big dropping low that it could rally hard off of. I don't know. I just want to see what that one does. I don't really have a game plan there. I'm not trading it right now. I'm just watching it because I had so much momentum and this is crazy. But it did blow off at the same time here, which is good to know. And then the other things I'm looking at the material stocks, which look like they're kind of pulling off the uptrend, but if we get into a topping pattern, you can rally really hard up underneath. These could lead a move up. Like I would expect these ones to lead the last move up. And I think we're not in the last move up yet. I think the next move up, these ones will be better than they are now. Like FCX is copper, Alcoa is aluminum, uh, UROI is uranium. So I think sort of energy materials stocks are gonna remain interesting, and those ones seem to be the best ones in terms of momentum and chart patterns that I can find. And I looked at some things like AG is silver, which is not, it's doing the thing. Like it did do the coil. It actually looks like it's gonna have a decent chart pattern now also, but I think I think we're gonna get another move of meme stocks and Nasdaq stuff, and I think maybe the next move up, these ones will be better than those. But this time, it looks like money's coming into the meme stocks again. All right, so that's enough, I think, for now. That's the whole thing on GameStop with the interest rates and the inflation and the retail sector. Yeah, small caps. GameStop has its hands in a bunch of. Oh, I did not even mention Melvin Capital, which is not news. I mean, that was a month ago or something. But Melvin Capital is going totally out of business because of the GameStop short squeeze trade scandal situation, which is pretty ridiculous. Like, that's pretty ridiculous. Like, GameStop actually destroyed Melvin Capital. And so now, now if it squeezes, who's gonna go and do some illegal crap and and like destroy the squeeze this time? Like they're out of business. But somebody's short on it again because the short interest is high. So this should be uh, this should be a really interesting month for sure. And yeah, I guess that's about it. Not investment advice. Smash the like button for me, and you know, trade safe or not, whatever you want to do. Like there's so much nonsense talking about retail investor, blah 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 blah. Like that kind of nonsense makes me expect something crazy to happen again too, because like they're making excuses in advance. Like I think they know it's gonna run again, and they want to blame retail investors for being like whatever. I don't know why you want to blame retail for for the market being volatile, but like it just sounds like excuses are happening in advance of like a big move. Is what it looks like. The news is just so stupid. Uh, okay, that's it. Cheers.